Hello, my name is ATP and welcome to another episode of the best stocks you can buy, this time for November 2024. Today I'm excited to announce that our top stock pick for this month remains Merk Company with a ticker MRK. As usual, I will present my detailed analysis with fair value calculation and buy it for my personal portfolio. If you are new here, don't forget to subscribe and let's get started. Before diving into the full analysis of Merk, I want to thank XTB for supporting this video. XTB is a broker platform with 0% commissions for buying stocks and ETFs, with a minimum transaction value of only €10. With XTB, you can invest knowing that your money is safe. XTB is my personal choice for creating investment portfolios for both stocks and ETFs. And if you'd like to know more about my full portfolio, you can visit my new website algotradepro.com and go to this page. The link is in the description. Now back to Merk. After carefully analyzing recent opportunities, Merk continues to stand out as an exceptional buy opportunity. Last month, we set a buy limit order at a price of $101, which was effectively activated when Merk's stock price dropped. Additionally, the company's latest earnings report showed positive results, which only supports the potential upside. Currently trading around $102, Merk offers a large margin of safety to its fair value, making it a top choice once again. For those who want a full introduction to Merk Company, including an overview of the company and its market position, I encourage you to watch last month's video. In today's episode, we'll go straight to the updated fair value calculations and discuss why Merk remains a solid pick for November. Let's look at the numbers. Firstly, using a discounted cash flow or DCF analysis from the Finbox website, Merk shows a potential price appreciation of 50.7% with the growth exit formula, 39.3% with the EBITDA exit multiple, and 23.2% with the revenue exit formula. Each of these analyses uses different metrics to calculate the fair value, and it's very solid to see that all three are optimistic. Then, according to professional investors' forecasts on the premium Simply Wall Street website, Merk is 63.7% undervalued with a fair value of around $281. Additionally, Merk's price to earnings or PE ratio is currently below its industry average, suggesting the stock is trading at a discount compared to its competition. Continuing with another valuation method from MarketBeat, Merk's fair value shows a 27.53% upside with a price target of $129. Then I also like to check the alpha spread, which calculates three scenarios: a base case with a fair value of $142, an optimistic one at $211, and even in the worst case scenario, Merk's fair value is still $110, which is higher than the current price, indicating a rare opportunity where even the pessimistic scenario shows an upside. Finally, value investing predicts an upside of 37.41%, with a fair value of around $140. So, when we average all of these values together, Merk's fair value comes out to around $159. Since the stock is currently trading at around $102, this gives us a 56% potential upside, offering us a large margin of safety. On top of that, Merk pays a 2.9% annual dividend, which adds another layer of value to holding the stock long term. Now let's go to my XStation 5 account to buy another share of Merk. As a reminder, XStation 5 is the platform provided by XTB, offering 0% commissions to buy stocks. If you want to follow along, check out the link in the description. So let's search for Merk in the Market Watch. Select the stock option, not the CFD, and check the price action on the chart. Then I will right click on the chart, select new order and in my case I will insert one share here and click on the green buy button, and it's done. And that's it for today's video. I hope this analysis helps you understand why Merk remains a top opportunity this month. If you enjoyed the video, don't forget to subscribe, like and share it with anyone who might find it useful. Thank you for watching, and I will see you in the next one. Bye bye.